Begin with markets, where investors will be looking for a bounce back session. Joining me now is Tom Hayes, Chairman and Managing Member of Great Hill Capital. Tom, welcome to NYSE Live.
Thanks for having me, Ashley. Glad to be here.
So right now, about 84% of investors are pricing in a rate cut. Do you believe that the hard data supports this move to lower rates?
Yeah, unquestionably. I mean, what Chair Powell did on Friday was he acknowledged the dual mandate. We've been seeing cracks in the labor market, weakening of the labor market. Even their own summary of economic projections was projecting 1.4% real GDP. So it's about time that they stop focusing on inflation, which they acknowledge may have a short-term bump due to tariffs, but then roll over and focus on the labor market. They're over 100 basis points too restrictive. Everyone knows it. It's really hurt the housing market. It's really hurt people trying to buy a starter home. So this is very positive. Not only 84% of a cut in September, but an 84% of two cuts by December. So that's very, very positive for the markets.
Anything else the Fed will be watching most closely for, before its next policy meeting in September?
I know we get some inflation numbers on Friday, but I think more important than that is going to be the employment numbers. The jobs report the first Friday in September is going to be the most important thing. If that shows continued weakening, it's a guaranteed lock for the cut, maybe even 50 basis points if the jobs report shows some weakness. As far as the inflation number, I think that'll have a lower weight this time around than the employment numbers.
So earnings season is wrapping up. This is the third straight quarter of double digits earnings growth.
Yes.
What is your takeaway from this earnings season?
Well, I mean, the bar was low. 4.8% earnings growth expected before we started, came in 11.8%. So it's not just that we beat and all the numbers were great. The most important thing was the guidance. And what we're seeing is for 2026, estimates have gone way up. Okay, they were down as low as $295 a share in earnings, up to $303 as of the end of this earnings season, which takes the multiple down a little lower. Companies are getting confident. They're upgrading their guidance, and that's the formula for good things to happen.
So investors who bought the dip in April, proved to be successful.
Yes.
What is your guidance for investors for the rest of 2025?
Okay, well, we've been pound the table bullish the last few months, so we are smiling so wide we could eat a banana sideways. However, Ashley, the key thing here is the market's moved a long way in a short period of time. So I think if you're just chasing the indices expecting a lot more, you might be a little bit disappointed because that's basically a Mag 7 index. Mag 7 earnings growth has decelerated, so it was 33% last year. It's down. This quarter is going to be possibly below 10% for the first time, and the multiple hasn't contracted. Conversely, Unmagnificent 493, International, Small Cap, all the laggards, that's the new catch-up trade because managers got caught flat-footed. Most of them were sellers in the hole, not buyers. A net $1 trillion of equities got sold on April 7th, before, right around Liberation Day. So they still have to play catch up. They're not going to chase the Mag 7. They're going to buy those things where they think they can get out performance into year end to hopefully beat their benchmarks and keep their jobs. So that's where I would be focused. Small caps, mid caps, value versus growth, some international, and that's where we're looking for opportunities.
And anything else you're advising clients on right now?
I think that you have to be, we're very constructive on the markets and the economy, but we need to be very, very selective on where we allocate new capital because there are still tremendous opportunities even after the 30% rally off the lows. But you have to pick the right ones, and that's where you're going to get out performance into year end in the laggard stocks and in the catch-up trade for managers.
And just to shift back to earnings, we have a pair of notable earnings this week. NVIDIA is reporting on Wednesday. NYSE listed Alibaba on Friday. What should investors be looking for?
As a major holder of Alibaba for a couple of years, brought our basis down to $82. I think Alibaba is going to shoot the lights out again. So for those who don't know, it's like the Amazon of China. They've got 40% of the e-commerce market. It's a toll taker on the middle class. They've got 40% of the cloud business, think Amazon Web Services, and growing. They're the cheapest AI play in the world. They have stakes in pretty much every AI startup in China. They've got the fastest large language models in the Qwen offerings, and that business, their AI products, have grown triple digits every quarter for the last 7 quarters, and I think we're going to see the same thing this quarter. So you got 20% expected earnings growth next year with Alibaba, trading at about 13 times earnings. You can't get that anywhere in the United States. And then President Trump keeps saying, I'm going to meet with Xi in China and et cetera. We're going to shake hands. The minute they shake hands, this stock is going to be up so big, because Chinese stocks have outperformed U.S. stocks. Most people don't know this year, 3-1. Hang Seng's up 30%, S&P is up 10%. So that's where I'd be focused on personally. As it relates to NVIDIA, earnings are probably going to be good. Okay, we know that. The demand is there. The question is the supply and their guidance looking forward. It is priced for really good things to happen. So if any aspect of the guidance is less than expected or slightly weak, you could have a little bit of short-term turbulence, but it's a juggernaut. And the big play that's going to help NVIDIA that no one's paying attention to is Intel, because NVIDIA's sales growth rate has slowed down dramatically, not due to lack of demand, lack of supply. Taiwan Semiconductor can only give them so much allocation. If we stand up Intel to produce these advanced chips, which now the government has backstopped, that's going to be really, really good for NVIDIA as well as Intel.
Tom Hill from Great Hill Capital Management, thank you so much for joining us at the New York Stock Exchange.
Thank you, Ashley. Appreciate it.
Coming up.